Hi, this is Adam Koo, and I'm really excited to announce that the Professional Forex Trading course is now open for enrollment. So whether you're a beginner and you've got no idea what Forex is all about, or you've been trading for years without much success, this course is designed to give you the skills and the strategies to achieve consistent profits trading the Forex market, so you can create another source of income for yourself. And for those of you who have got no idea what Forex is, here's a quick primer. So Forex stands for foreign exchange or currencies. And we're basically trading one nation's currency against another nation's currency. And the great thing about trading Forex is that it's a 24-hour market. So it's 5 days a week, 24 hours, never sleeps. And so you're able to trade at your own time. You can trade around your day job or trade 24 hours a day if that's what you want to do. The other great thing about the Forex markets is that it's extremely huge. The Forex market accounts for 3 trillion traded a day compared to 500 billion for the stock market. So because of this huge volume, there's a lot of liquidity, and volume, you can enter and exit the markets really fast. At the same time, you're able to leverage on your capital. In other words, you can control a large amount of capital with very little money without paying any kind of interest. In a stock market, you have to pay interest when you trade on margin, from anywhere from 3% to 9%. But in the Forex markets, you're basically trading without paying any kind of interest. So we trade some of the common pairs in the Forex markets, like you've heard of Euro USD, or known as Euro Dollar. We trade the Pound Dollar, we trade the Dollar Yen, Dollar Franc, Aussie Dollar, New Zealand Dollar, and the Dollar Canadian. So how do you generate profits from Forex markets? Well, you do it in 2 ways. You either buy a certain currency pair, we call it going long, or you sell a currency pair, known as going short. So let's take a look at an example of the Euro USD currency pair over here. So if we think that the Euro USD is going up, in other words, we think that the Euro is going to strengthen against the US dollar, or the US dollar is going to weaken against the Euro, it's going to go up because it's on an uptrend, we're going to buy the currency pair, or we say we're going to go long the currency pair. So for example, you can see that this is an area where I would buy, anticipating that the price will go up because it's on a very clear uptrend based on looking at moving averages and candlestick patterns. And that's what I'm going to teach you in the course. So for example, at this level, I'm going to buy the Euro USD pair at 1.1951, or we simply call it 1951, all right? And I'm then going to sell it at a particular level once it hits my profit target of, say, for example, 1.2077, also known as 2077. So if you take 2077 minus 1951, that gives you 126 pips, right? So in the Forex markets, we go by pips. In the stock market, we go by cents and dollars. We go by pips. And a pip is basically the 4th decimal place in a currency pair, which is non-yen related, okay? So when you make 126 pips, that is $10 per standard lot, right? So every pip is $10 per standard lot. So if you buy one standard lot, which is about 100,000 of the base currency, that gives you a $1,260 in net profit. Now at the same time, if I think that the Euro USD is gonna go down, right? I'm bearish because it's on a clear downtrend based on, again, moving averages, candlestick patterns. I'm very convinced it's gonna go down. I'm gonna sell the Euro USD pair. For example, at this level, when it's near the moving averages on a downtrend, I sell at 1.1840. Again, also known as 1840. And I sell, it goes down to a certain level. I feel, okay, it's hit my target price. I'm going to buy it back. All right, so I'm going to sell it. I'm going to buy it back at 1736. So you take 1840 minus 1736, you get 104 pips. And again, how much is 1 pip? So 1 pip is $10 per standard lot. Okay, now you don't have to buy one standard lot. You can buy a lot smaller. That's the great thing about the Forex markets. You can start with as little as 200 US dollars, as much as 20 million US dollars, right? So it's extremely flexible for anyone with whatever investment capital you want to start with, right? So 104 pips, $10 per pip, one standard lot is $1,400 for a trade like that. Now, I trade both stocks and Forex, and just like stocks, I treat Forex trading as a business by itself. So remember that in any business, you make money by buying something at a lower price and selling at a higher price. For example, if you own a restaurant, you're buying ingredients at a lower price and selling the food at a higher price, right? So the same thing with stocks and forex trading. You're buying assets, in this case currencies, at a lower price and selling at a higher price. And the reason I trade both is so I've got an additional source of income or product, right? Kind of like, imagine if you have a restaurant, like McDonald's, for example. So during the day, you're selling burgers and fries and chicken, right? But in the morning, people don't eat burgers, fries, and chicken. So in the morning, you sell pancakes and waffles and breakfast. So it's the same thing. So I trade stocks when the stock market is open. But when the stock market is not open, I've got nothing to do. I trade forex. So I'm always having something to trade. So whether you want to trade forex by itself or trade forex as an additional complement to trading stocks, both will work at the same time. So what's great about the forex trading business and the stock trading business for that matter? Well, especially for the forex trading business, you need very minimal investment, right? In most businesses, if you're starting a restaurant, it's going to take a few $100,000 to renovate the restaurant and hire staff, right? In the forex trading business, you can start with as little as $200 US, okay? Of course, you may want to start with a few $1,000s, but I'm saying you can even start with a few $100, right? But next, minimal time commitment. In most businesses, you're working 15 to 16 hours a day, especially in a startup business. In forex trading, all you need is 3 to 6 hours a day is more than sufficient to generate a reasonable stream of income for yourself. Best thing about forex trading, no employees, no office space required, no inventory required. You can do it from anywhere around the world, and it's recession proof. So it is totally non-correlated to the economy and not correlated to the stock market. So that's the beautiful thing about it, right? Because in forex, we make money by either buying or selling. So it doesn't matter where the currency pair is going, we just have to identify the trend and direction, and we profit from that direction. So a lot of people are now saying that, hey, you know what? The next financial crisis is going to hit. The next recession is going to happen because it's every 10 years, right? And I say, who cares? I'm still going to make money because I'm trading forex. Okay? Next, again, 24 market gives you extreme flexibility. So you can build your forex business from anywhere in the world, whether you're sitting on the beach or wherever you want, right? Anywhere around the world. And you can plan your daily trading routine around your day job. You don't have to quit your day job to be a good forex trader. Next, you're able to generate consistent profits. And profit returns of 5% or 20% a month are very possible and very realistic when you trade forex properly. All right, so in other words, with a $100,000 account, you can generate $5,000 to $20,000 a month in profits on average. Now, I know some of you are saying to me, Adam, I've heard people getting 100% return a month, 1,000% return a day. Yes, that can happen, but I can tell you can't do that all the time. And very often that comes about through luck. I always say that any monkey can make money in the forex markets. Any monkey can make money in the stock market. All you got to do is just be there at the right place at the right time and put a big bet, because the market either goes up or goes down. So you've got a 50-50 chance of being right. Okay, so making money is very simple. What is difficult is doing it consistently. So a lot of people make a lot of money at one time. What they don't tell you is that they lose everything or more the next time. So I always ask people, are you interested in getting a big score one time and losing it? Or are you interested in getting consistent profits monthly? Right? If you're interested in a big score, well, this is not for you. I'm here to show you how to develop a sustainable forex business where you're not looking at a few 100% returns or a few 1,000% returns, because those are not sustainable. We're just looking at 5%, 10%, 20% returns at the very most a month. And if you can do that consistently and grow your capital, that can exceed any other investment you can make in your life. Okay? The other thing I must tell you is this. Is forex trading easy? No, it's not. Okay? Because if it was easy, nobody would work. No one in the world would work. Everyone would stay at home and make money by pressing a button. It is not easy. All right? Learning to trade forex, or learning to trade stock, is like any other profession. It's like being a doctor, a lawyer, an engineer. It takes skills, it takes knowledge, it takes hard work, it takes practice. Okay? There's no free lunch in this world. No one gives you free money. Always remember that. Okay? The good thing is that the skill of forex trading as a profession takes relatively less time to master than other professions, whether it's being a doctor or being a lawyer, but it still takes time nonetheless. So I'm not going to tell you that you can master this overnight in 1 day or 3 days. No, it's going to take months and months of practice. Okay? In fact, when you first start, my suggestion is the market's always going to be there. Don't be quick to make a fast buck. Start with paper trading, demo trading. Once you master the skills and strategies and you can achieve consistent monthly profits, then you put real money in. So just like an airline pilot, before you fly the real plane, go in a simulator, crash it a few times. Once you learn, you understand, you fly the real plane. So I'm here to coach you to be successful in Forex for the long run. A sustainable income source and not a get-rich-quick scheme. I hope you do understand that. And that's the purpose of this course. Only enroll in this course if you're committed to work hard and master this skill. Because once you master the skill of trading, it's the only skill that can guarantee you an income for the rest of your life. Because nowadays, if you learn a skill like engineering or accountancy or programming, that skill can't guarantee us a job in 5 to 10 years. Because we can be replaced by someone else with the same skills who are younger or cheaper or faster or hungrier, right? But when you can trade the financial markets, again, anywhere in the world, as long as you've got a laptop, you've got an internet connection, you can create income for yourself. So what does it take to succeed as a trader? It takes 3 factors. Factor number 1 is this. To succeed in trading, you've got to have a winning system. Most traders trade without a system. They buy when they feel like buying, they sell when things are going down. You've got to have a proven trading system that gives you specific entry rules, exit rules. Okay, and this winning system must give you an edge in the markets. You must have a positive statistical expectancy. So what does that really mean? What it means is that whenever you put on a trade, you never know if it's going to be a win or loss, right? And you can't win all the time because you can't predict the future. But you can have a trading system that uses a strategy that works such that you are right more often than you're wrong. Okay? So if you toss a coin every day and you enter the markets, your chance of being right is 50-50. But when you can follow the trends and identify the right candlestick patterns with the right indicators, you're able to be right more than half the time. I would say 50 to 60% of the time is pretty effective. It's pretty realistic. Any more than that would not be really realistic. In other words, you must be prepared that when you trade, 40 to 50% of your trades are not going to be winners. And that's the fact of the game. The way I look at it, again, is like trading is like a business. You've got to have sales and cost. Sales minus cost equals to profits. So in the trading business, when you have a winning trade, it's a sales revenue. You've got a losing trade, it's a cost of goods sold. So net, you make a profit as long as you win more than you lose. Does that make sense? And you've got to ensure that when you win a bigger amount than when you lose. And you do that by setting specific entry price, profit targets, and stop loss prices. And I'm going to teach you exactly how you do that when you trade the Forex markets. Okay? So when I trade the Forex markets and I enter a certain currency pair, I place a stop loss and I calculate the size of my position such that I only risk 1% to maximum 3% of my capital. And we call that a 1R risk. Okay? And I place a profit target of 1.5R. Now, I know some of you who may have taken my stock trading course will say, hey, why don't you use 2R for Forex? Well, Forex is different from the stock market. Forex prices move a lot more erratically. They're more volatile. So what's optimal is a 1.5R profit target. It works for me, it will work for you. In other words, if you risk 1% of your capital, you will get a 1.5% return. If you risk 3% of your capital, you get a 4.5% return on your capital, right? Because 1 is to 1.5, and you can be right 50 to 60% of the time. So what that means is, on average, if you do 20 trades a month, so I'm going to teach you a system where you do, on average, 20 trades a month or more sometimes, right? So at a 60% win rate, you're winning 12 trades and losing 8 trades. Again, sales revenue, cost, like any other business, all right? If you risk 2% of your capital on any single trade, a loss will be a 2% loss. A win will be a 3% gain on your capital, right? 1 to 1.5. So each time you lose 2%, that's minus 16%. Each time you win is 3%, it's 36%, and that leads to a 20% return a month, all right? If you get a 60% win rate. Now, again, what if you get a 50% win rate and you're only right half the time, right? Like tossing a coin. Well, you get 10 wins and 10 losses, but again, because of controlling your risk, such that you only lose 2% and you only take profit at 1.5 times your risk at 3%, making 30% minus 20%, that's still a 10% return a month. Okay? So you can get anywhere from 10% to 20% a month, depending. All right? Of course, there will be months where you drop below 10%, there will be months that you go above 20%, but that's a good average to benchmark against. And if you take a look at this graph, a 10% monthly return compounded will grow your capital exponentially. From 10,000, for example, starting in month 0 to close to 100 grand in month 24 or 2 years. And again, this is based on just a 10% monthly return. At 15%, 20%, it's more than double of that figure. Now, there are many ways to trade Forex, and different traders have different styles. I wouldn't say that one style is better than another style, but all of us would have a style that works for us. Okay, so let me explain the 4 different kind of Forex traders and the kind of trader that I am. So if you want to learn from me, you have to understand my style of trading Forex. Okay, so first of all, you have got position traders, and these are the guys like George Soros, for example, right? So usually when they take a position, they hold it for weeks to months, riding the larger trend in the currency pair. And they normally look at fundamental news more often than not. And they usually target anywhere from 500 to 1,000 to 2,000 pips per trade. And they trade on daily candles or weekly candles or even monthly candles. So these are position traders. This is not something that I am, right? Next, you've got swing traders. So swing traders typically target 50 to 150 pips per trade. And the duration of each trade is usually less than a week. So usually they hold the trade for a couple of days, 4, 5, 6, 7 days, and they look at hourly charts, 1 hour, 4 hourly charts. So these are swing traders. Next, you have got day traders. And day traders, they enter and exit the Forex market within 24 hours. So they typically do anywhere from 1 to 3 or 4 trades a day. They target 20 to 40 pips per trade, and they look at 50-minute candles, 1-hour candles, and 4-hour candles. And you have got scalpers. So scalpers are really, really short term. They are looking at the markets every single moment, bar by bar, candle by candle, and they get in, they get out within 1 minute or 2 minutes, and sometimes even seconds, and they just go for 5 to 10 pips per trade. Okay. So over the years, I've traded as a swing trader, I've traded as a position trader, as a scalper, as a day trader, and what has been the most profitable for me right now is actually day trading. So the way I trade is using 15-minute candles. I'm able to do anywhere from 1 to 2 to 3 trades a day. I do anywhere from 15 to 30 trades a month, and I get really good results from that. So that is the trading system that I'll be teaching you, a day trading system on currency pairs using 15-minute candles. Okay, so that is about the winning system that you'll be getting in this course. Now the second thing is you're going to learn about how to size your positions, right? You can have the best winning system, but unless you know how many contracts to buy, how to keep your risk small, you can get lousy results even with a good system. And that's why sometimes a great trader can teach the system to 5 people and they get 5 different results because they do not know how to manage their money and their risk in the right way. So I'm going to teach you about risk management and how to calculate the number of lots to trade. So you have to understand that when you use position sizing techniques, okay, it doesn't matter that you have you're going for 100 pips or 20 pips. In fact, sometimes going for 20 pips can be just as profitable or more profitable than 100 pips. It all depends on how much leverage you use, how many lots you trade. Okay, so when traders say that I captured 100 pips, I captured 500 pips, it means nothing. Sometimes I can get 20 pips and make more money than a guy who went for 100 pips because of the leverage and the kind of lots which I trade. Okay, now 60% of your success, and a majority of your success is really your psychology. Right? It's all of trading psychology. So in a course, I'll not just teach you the specific technical strategies, but I'm going to emphasize a lot on how do you trade with no emotions or very little emotions. How do you disengage emotion from the market? And how do you develop the self-motivation, discipline to follow the rules and not allow fear and greed to override your system? And how do you have the determination and focus to master the skills to be a successful trader? And that's what it takes. And that's what you're going to get in this course. Now, besides the training lectures as well as the course materials, you have got comprehensive notes. You also will be given a lot of the important resources to succeed as a trader. For example, you'll be given what we call the forex position sizing calculator, where you're going to calculate exactly the amount of units or lots to trade on any given trade. So this will be given to you, the forex position sizing calculator, and this is the course curriculum. So let me just run through it so you understand the full course you'll be starting your journey on. So in lesson 1, you're going to be learning basically an introduction to forex trading. So for those of you, again, who are beginners, who've got no idea what forex trading is all about, this first lesson is to get you up to speed. You'll be learning again about the business of forex trading, why it's one of the best businesses in the world. You'll be learning about forex basics like currency pairs, how do you calculate a contract size, and again, how do you profit from forex moves, and the rest of the curriculum we explained to you in lesson 1. You can actually look at lesson 1 on YouTube. I made lesson 1 available for anyone who wants to look at it, because that's really the basics of forex trading. Now in lesson 2, we'll go into the secret to consistent trading profits. You'll be understanding about how do you trade like a casino, right? How to employ the same business model a casino employs to generate consistent profits. That's why the casino, the house, always wins at the end of the day. You learn how to develop a trading system with a positive expectancy, and I'll be giving you my systems to use. Lesson 3, we go into mastering technical analysis in the context of the forex markets, right? You'll be learning things like candlestick patterns, how do you identify trends in currency pairs, how do you utilize support and resistance levels, how do you master moving averages, and you'll also be learning hands-on how to use the trading platform known as the MT4 platform, which is a standard platform that most forex traders use. In lesson 4, you'll be learning about position sizing. Again, how do you manage your risk and your money? How do you calculate the exact number of units or contracts to buy? And how do you automate your trading business by using the right order management tools? How to use the right kind of orders, all right? Market orders, limit orders, stop orders, when to use which particular set of orders. In lesson 5, we go into the real goodie part. This is the real treasure trove. You're going to learn my first strategy called the FX Impulse Pullback Strategy. You'll be learning the specific price action patterns, entry and exit rules, and how do you filter for the highest quality setups, and again, trade management and exit strategies. It's a complete trading system. And in lesson 6, well, before lesson 6, let me show you an example of how that strategy works. So again, like I said, this strategy works on 15-minute candles. All right, typically a trade lasts for anywhere from 15 minutes to 3 or 4 hours at times. Okay, so for example, we identify the start of a new short-term uptrend using moving averages and candlestick patterns. Right, we have what we call a swing high over there, generated by a crossover in the moving averages. We have got a pullback. So in trading, you never want to enter at the start of an uptrend. You always want to wait for a pullback before entering and capturing the next wave. Because often what happens is that when you have a crossover signal on the moving averages, a lot of amateurs will start buying, right? They buy. And what happens? They place their stop losses, and the market tends to fool them. The market likes to fake traders out, right? The market tends to push the price down and hit their stop losses, and they get taken off the market. And that's precisely when we are going to enter the market. We're going to enter the market right after the pullback, and we enter, for example, at 0977 with a stop loss of 0969. So it's an 8 pip stop loss, very tight stop loss. That's 1 R. All right, so we're going to calculate such that 8 pips represents 2% of risk, for example, in our capital, right? And our profit target will be 12 pips away, really close by, 1.5 R. So the moment, boom, it hits 0989, we exit with 12 pips, which is 1.5 R profit, which is for every 2% you risk, 3% gain. All right, here's another example of a short trade. Again, we identify crossover on the moving averages, signaling a new downtrend. And right after the downtrend, we wait for a pullback, slight pullback, and we enter somewhere over here. Okay, at 0989. 9894, sorry, okay? Again, a very tight stop loss at 8 pips away, okay? So that's our 1 hour risk. Our profit target is 1.5 hour away. We hit our profit target, as you can see, in a couple of bars, and we get 1.5 hour gain, so which is 3% gain on our capital. So by using leverage, right, just a small movement of 12 pips is 3% return on our capital, okay? Here's another example of what we call the impulse pin bar strategy, which is the next strategy I'll be talking about, where again we are looking for a specific crossover on the moving averages, a clear uptrend, and this often happens. You've got a pin bar that takes out previous stop losses placed by traders, so it fools the traders into thinking that it's going down, then it reverses up, and boom, it goes up. Okay, so the moment we see that pin bar, we're going to enter at 0910. Again, a very tight stop loss at 8 pips away. There's a 1 hour risk of 2%. Profit target 1.5 hour. We hit it in a couple of bars, and we're out for another 3% gain. Okay, so you'll also be getting this forex trading journal, where for every trade you make, just like a business, you have to record every single product you sell. Sales, cost, profits, right? Just like a business should be. And that's how you get consistent profits. So for example, in September, this was my trading journal. You can see I did 17 trades. Again, sometimes I may do more than 20 trades, sometimes less than 20 trades. It all depends on the trades that come along, okay? So for example, you can see that these are the signals of impulse pullback, impulse pin bar. We trade all the different pairs in the markets, right? As you can see, a win would be 1.5 R, okay, and a loss would be 1 R, okay? So the important thing is to have more wins than losses, so that you net the month as much as possible with a positive R. So for example, in September, I got 10.5 R in profits. So again, what does that mean? Well, if you risk 1% for a trade, that's a 10% return on your capital. All right, 10% return on capital. If you risk 2% risk per trade, that represents over 20% return on capital. So lesson 6 will be going to psychology of winning traders. I'm going to teach you how to condition your mind to trade at your peak performance. I call it going into the Zen zone of trading, right? So you're going to be learning about how winning traders think differently from the herd, from the crowd, the losing traders, right? 90% of people lose in Forex because they think like the rest of the herd. You're going to learn how to think differently. You're learning how to manage and overcome negative emotions, how you manage temporary drawdowns in capital, and again, how do you program your mind to be a winning trader using things like neuro-linguistic programming, NLP. Lesson 7 will be the FX impulse pin bar strategy. I talked a bit about that earlier on. Again, this strategy is very powerful. You'll be learning exact entry-exit rules, price action patterns, indicators to use, and trade management and exit strategies. Finally, in lesson 8, we put everything together. You'll be learning how to develop a trading plan, like a business plan. You learn how to develop a daily trading routine that takes 3 to 6 hours a day. How do you keep a trading journal? And also show you what are the best FX brokers you can use. They'll offer you the tightest spreads and the lowest commissions. Okay, so that concludes what I'll be covering in the professional Forex trading course. Now the course officially launches on the 1st of November. And for the first 100 who enroll, there'll be a special promotional price. So while seats last, if you want, you can grab it as soon as possible. The site is live, you can go there, you can enroll, and I'll be supporting you all the way through the questions that you have through emails, and I'm going to ensure that you succeed in the Forex market. So this is Adam Koo, take care, and I look forward to coaching you in this course.